What's going on, everybody? My name is Zach Hartley, and I just spent the last 4 hours watching every single dividend stock video that you could possibly find on YouTube in order to assemble a list, do my analysis, and compare every single one of these influencer recommendations so that hopefully by the end of this video, we can try and identify a couple of good dividend stocks that we can add to our portfolio. And in this one, I'm going to share with you all of the details, all of the analysis, and which influencer actually gives the best recommendations. So without any further ado, let's jump right in. Alright, so this is the spreadsheet that I've assembled over the last couple of hours here. On the left-hand side here in this column, we have over 60 different dividend-paying stocks that I've evaluated and manually entered into this spreadsheet. As we move over, we have the dividend yield. This is how much yield the company has given us in the form of a dividend over the trailing 12 months. We also have the current price here and then the trailing price to earnings ratio. This represents how much earnings the company has generated relative to their share price. Basically, how profitable is the company compared to how much they cost right now. Then we have the payout ratio, which shows us how much of their profit they are paying out to shareholders right now. Anything above 100% would mean that they're dipping into their reserves or borrowing money to pay their dividend, and that is something that we do not want to see. The lower the better here. The low payout ratio with a high dividend yield is like the golden scenario for us. And then I'm also evaluating their current ratio and their balance sheet just to make sure that it's a healthy company that's not stripped with debt right now. And then I also want to see if their revenue is increasing. I'm basically looking at this on an annual basis, and I basically just want to see a steady revenue increase for the company. If we are not seeing that, it's a no. If we are seeing that, it's a yes. Now, on the far right-hand side here, I have all of the YouTubers who I watched their video and found the stocks on. So we've got Adrian in a t-shirt, we've got Average Joe Investing, Brandon Vivas, Charlie Chang, Daniel Pronk, Dividend Bull, Humphrey Yang, Joseph Hogue. We did one from Kevin O'Leary, Morgan Sessions. This is a member of my Discord chat, so if you're interested in seeing any more analysis like this, everything is in the Discord chat, link down below. I watched a video from Nate O'Brien. We watched one from the Passive Income Investor and one from Tracy. I forget what her YouTube channel is, but I'll link it down below if you want to check it out. So altogether, we have gone through 69 minus 5. We've gone through about 64 different stocks that I have got recommendations from these creators in their videos. And now what I've done here is kind of put them into the spreadsheet, and we want to compare them to figure out which one is actually a good company based on the metrics that I'm using here. So since we're building a dividend portfolio, the first thing that we are going to sort by is the dividend yield here. And I'm basically going to sort it from highest to lowest. Now, as you can see here, the first company is currently sitting at a dividend yield of 11.67%. But what you need to know is that that is an extremely high dividend yield, and it's usually not sustainable when it gets that high. So when we see something like that, we need to dig deeper, we need to dive further, because there's probably going to be some red flags. And very quickly, that is exactly what pops up. This company is currently not profitable. They do not have a PE ratio, and I couldn't even find the payout ratio, and their current ratio is okay. It's not great, but their revenue, I'm just pulling it up right now, their revenue is barely increasing, and it's actually down over the last 2 or 3 years. So right away, a couple of red flags that we can easily identify if we are just evaluating this company and it pops up because it has a high dividend yield. I want nothing to do with this company because they're not profitable and their revenue is not increasing right now. So now as we go down here, we've got another company above 10% here, current price $11.44. The PE ratio is 21.58, so not crazy here, but their payout ratio is well above 100%. It's currently at 215%, which means this company is either taking on debt, pulling money from their reserves, or raising money in order to pay their dividend out to shareholders, and that is not what you want to see. You want to be receiving a dividend based on the profit that the company is generating from operations. Now the next company here, ORCC, again about a 10% dividend yield, current price $12.86. PE ratio even lower, which is attractive, but again, the payout ratio is over 100%. That is a red flag for me, and the revenue is also not increasing very steadily. Next company here, PSEC, they're below 10%. Current price is $7.34. PE ratio of 5.48, which is very attractive. Payout ratio of 54%, which is exactly where you want to be, but they have a current ratio of 0.44. That is kind of a red flag. That means they have some debt on the books that they have to deal with, and the revenue is also not increasing right now. So again, 2 red flags here, probably not going to be a great investment for me. Next one is CRT, dividend yield above 9%, current price $20, 13.68 PE ratio, but a payout ratio at exactly 100% and a current ratio at 1, with again no increase in revenue over the long term. Not a company that I want to add to my portfolio. Next one here is Glad, 8.49, a little more attractive, 6.96 PE ratio, very, very low, very attractive, payout ratio of 56%. That is extremely good, just where you want to be, and a current ratio above 1, which is perfect. They're not increasing in revenue though steadily right now, so one small red flag here, but I'm going to highlight it in green because it's something maybe I want to do a little bit more research on, maybe I want to dive into. We'll take another look. Now, what I'm going to do here is I'm going to go through the rest of this analysis here, and I'm going to try and find companies like this that I think are actually good and that have a chance of being added to my portfolio. And then at the end of this, I'm going to summarize everything for you so that you can see my analysis, which influencers are doing well, and which stocks I'm most likely to add to my portfolio.
A few moments later.
Okay guys, so I've gone through the entire spreadsheet and let me tell you what I was looking for. First of all, I wanted something with a dividend yield above 3%. So if it had a dividend yield below 3%, I just wasn't really interested in it for this because the yield wasn't really high enough. Next, I wanted to see revenue increasing, and they all have their revenue increasing except for 2 of them, and the dividend yields are extremely high to kind of make up for that. So I would need to do more research into these 2 companies here with regards to their future opportunities and their future revenue opportunities. But as of right now, they have fairly high dividends and good other metrics in here, so I did want to include them on the list. After that, I wanted a PE ratio that was at least reasonable. You can see the highest PE ratio out of anything I've selected here was like maybe 11. So everything on this list has a PE ratio below 11.72, which in my mind is oversold already. It's a really good deal, and if a company is generating 11 times price to earnings or better, I think that's a really good deal right away. I didn't choose anything with a payout ratio above like 83% was probably the highest here. 80%, 44, 43. So they had to have a payout ratio below 83% here, and they also have to have a current ratio that was above 1. So if it didn't have those metrics of increasing revenue except for 2 of them, a current ratio above 1, a payout ratio below 83%, a PE ratio below 11.7%, 11.72%, and a dividend yield above 3%. Those were the criteria in order to make it on my green list right now. So the first company here is Gladstone Capital, and then Sunoco, and then Devon Energy, and then Sun Life Financial, and then we have Smart Centers, SRU, I believe this is Smart Centers. Yeah, so this is Smart Centers Real Estate. This is a REIT, and this is a company that is focused on multifamily and retail offerings a lot in Ontario, and they are pretty big. So they are doing well. And then we have Bank of Nova Scotia, we have CM.TO, let's just see what exactly that was, I forget, Canadian Imperial Bank of Canada. And then we have RioCan right here, we have Granite, this is another REIT right here, GRT.UN.TO. Then we have TD and Royal Bank, we have PFEs, this is Pfizer, GSY, this was Go Easy, this is another bank actually, really interesting company. I got to do some more research on them. Maybe even a video coming soon, but this is a Canadian listed bank, Go Easy Ltd, ExxonMobil, and then JP Morgan Chase to kind of round it off. And so based on all of the recommendations from all the videos I watched from all of these creators, I think that these are the good dividend companies out of what they recommended and what they talked about in their videos. Now, for me personally, I am building a dividend portfolio in my RRSP. If you want to see how that turns out and which companies I add to that portfolio, I'll be making more videos about it over the next few months. So make sure you liked and subscribe to this video. If you got any suggestions out of this video, or if you just want to see the list of green lighted companies right here, I will put it in the description down below. Thank you so much for watching this video, and if you're interested in learning more about the stock market or dividend investing, I have a variety of free courses hosted on Skillshare where you will get 1 month free subscription to the entire platform. You can take any course you want, including my courses. It's pretty much like the Netflix, but instead of movies on there, they have creator courses and professional courses on there that you can use to improve your skills or learn something new. If you use the link down below, you get 1 month completely free. You can take all of my stock market and investing courses, and I promise you it won't be a waste of time. It'll be the best free resource that you can find online. Now, thank you so much for watching this video. Good luck trading, good luck investing, and we will see you in the next one. Talk to you later.